Hey guys, welcome back to another episode of Smart Risk. In this episode, we are going to show you some advanced techniques and setups that will make it easier for you to spot support and resistance levels in the chart, exactly like the experts. Just keep in mind, these crucial techniques and tips are everything you need to know to spot support and resistance levels that will take your trading to the next level. As you know, guys, support and resistance are two foundational concepts in technical analysis. Understanding what these terms mean and their practical application is essential to correctly read price charts. So just be sure to keep watching us. As always, to show your support, please be sure to click the subscribe button and turn on the notification bell so that you are alerted as soon as new content is released. So guys, let's get started. So again, one of the frequently asked questions among traders is how to correctly spot support and resistance levels in the chart. So in order to answer the questions like these, we must first understand what support and resistance levels really are. So what is the exact definition of support and resistance? Support and resistance are zones where the price has previously reacted to them and may potentially react again in the future. Now, why is it crucial that we identify these levels in our charts? We highlight these important levels in our charts because these levels can serve as potential entry or exit points. So, when price reaches a point of previous support or resistance, it will do one of these two scenarios. 1. Bounce back away from the support or resistance level. 2. Violate the price level and continue in its prior direction until it hits the next support or resistance level. So guys, you should already have these levels drawn in your chart as a reminder to look. Now, there are particular principles and factors we look for to spot support and resistance levels, which we are going to show you right now in this section. 1. We look for swing highs and swing lows, which are the highest and lowest points the price has recently hit. 2. We prefer to look for areas with multiple rejections. The more rejections they have, the better. 3. The level should be obvious, meaning when you look at the chart you should be able to identify the level immediately away. 4. The bounce away from the level should be drastic, meaning price should instantly bounce back away from support or resistance level with big candles. 5. The level has provided both support and resistance, meaning that it was respected on both sides. In greater detail by using the charts. So, starting with criteria number 1, swing highs and swing lows, which qualify a level of support and resistance, meaning the highest and lowest points price has recently hit in the chart. So we look to the left and note that the price went up, hit, and rebounded. And this is the highest point that price has reached recently and finally makes a swing high here. So we highlight it as a resistance level. So again, here at the bottom, the price dropped, hit, then reversed twice. And this is the lowest point that price has touched recently, so it forms a swing low right here, which we flag as a support level. Always remember, guys, we do not enter trades at support and resistance levels blindly and without any confirmation, regardless of how high or low the price is, or whether the level is qualified or not. We always wait for the price action, entry reasons and setups, and ultimately confirmations to enter a trade. So let's move on to the next criteria that we're looking for. Now, our second criteria which qualifies a level of support and resistance is multiple rejections. The more rejections levels have, the better. As you can see, price went up to this area, for times at different periods, and each time price got there, it reversed immediately, giving us 4 rejections and a level of resistance. So we highlight it as a resistance level. So, what is the significance of this? Multiple rejections indicate that price responded to this level more than once, showing that traders took action at this level in several time periods. So we can take advantage of this in our potential trades. Let's move on to our next criteria. Trait number 3, the level should be obvious, meaning that, when you look at the chart, you should be able to identify the level immediately away. So, here in the NZD US dollar, you can see the very obvious level right here. Price went up, hit, and reversed, indicating a clear resistance level, which is very obvious and can be identified immediately. The same scenario at the bottom, the price dropped, hit, then reversed. This is very obvious and you can detect it easily. However, here are some minor levels that are not obvious. Here in the left corner, you have a minor level that is not obvious. Also, you have this next minor level here, which is not obvious. Minor levels might be helpful for scalping or swing trading systems that we will discuss these topics in later videos, but for now, concentrate on the obvious key levels. What is the significance of obvious level? The more obvious the level means, the more traders will consider this level as a key level, which increases the probability that traders will be taking action at these levels, such as setting new orders or placing their take profit or stop loss margins in that level. Now, let's move on to our next criteria. Trait number 4, the bounce away from the level should be drastic, meaning not a tiny move away, but price should be reversed sharply in the opposite direction. As you can see right here, price bounced away from this level drastically. So we have a level of support here. Next, right here, again price reversed sharply in its opposite direction, so we have another support level here. And again, up top, every time price reached to this area, it reversed drastically. So we have another level. So to the next trait. Trait number 5, the level has provided both support and resistance, meaning the level was respected by both sides at various times. As you can see, every time price reached to this level of support, it reversed. And finally, it broke through and came back up. The support turned to resistance and price hit and pulled back again, revealing that this level provided both support and resistance. So to the last criteria. Trait number 6, the level was recently respected or formed in a recent time period. In other words, the latest support and resistance levels are in the priority. As you can see here, price was rejected 3 times in a row from this resistance level in a very short period of time, meaning it is still valid in the current time period. If you look further back, you also can see this swing high formed by the market. But recent rejections are always more effective as they are current and new. Don't forget, the latest is the priority. Now before we continue, if you are enjoying this video, and want us to keep making more videos week after week, please be sure to click the subscribe button, and turn on the notification bell, so that you are alerted whenever new content is released. So now that you know what criteria and traits to look for, let's combine all traits together and apply all criteria and traits that we mentioned before, all together to indicate support and resistance levels on the various charts. Again, as a reminder, you only need one criteria to spot a level of support or resistance, but the more criteria that the level has, the better. So starting from very top, we have this level at very top where price rose up, hit and reversed from, so we draw in. We previously listed several criteria for what makes a good level of resistance. What does this level meet? Let's take a closer look. 1. This level is a swing high, meaning it is the highest point the price has recently hit. 2. The level is obvious, and you can spot it immediately away just in seconds. 3. Drastic movement, as you can see price drastically bounced away after it touched the level. And 4. As you can see there were multiple rejections of this level, because if you look closely there were 3 smaller rejections of this level. So we're heading down now. The next level we spot is this level, with 6 rejections. Rejection 1, Rejection 2, Rejection 3, Rejection 4, Rejection 5, and Rejection 6. So again, what traits and criteria does this level meet that makes it a good level? 1. There are multiple rejections of this level, 6 rejections in overall. 2. This level has provided both support and resistance. 3. The level was recently respected and formed in a recent time period, meaning in the current time period, it is still valid. 4. The drastic movement, meaning price drastically bounced away after this level. And 5. The level is obvious, as you should have seen the reversals very quickly from this level. Now, moving on down, we spot 4 rejections here and highlight another level. So again, what traits and criteria does this level have that makes it a good level of support? 1. This level is a swing low, meaning the lowest point the price touched in recent times. 2. There are multiple rejections of this level, for rejections in overall. 3. Drastic movement, meaning price sharply reversed after it touched this level. 4. The level is obvious, as you should have detected it instantly just in seconds. And 5. The level was recently respected and formed in a recent time period. So let's try it again on another pair. Here is the euro-dollar, and again starting from very top. As you can see, price rose up to this level, hit and reversed, so we draw in. So again, what criteria does this level have that makes it a good level? 1. It is a swing high. 2. Drastic movement, meaning price sharply reversed after it reached this level. 3. The level is obvious. So moving on down to the left, as you can see, we have this level where price rose up, hit and reversed from, so we highlight it. The criteria that this level fulfills is that 1. Drastic movement, as you can see price sharply reversed after it touched this level. 2. The level is obvious. So moving on down to the right, we spot this level here, where price came up, hit and reversed from, so we draw in. The criteria that this level meets is that drastic movement, and the level is obvious, so moving on down, we have this next level here, so we draw in. This is a very key level because it includes most of the criteria we would like to see. Remember, the more traits a level has, the better. So 1. There were multiple rejections of this level. 2. The the level has provided both support and resistance. 3. Drastic movement. As you can see, the bounce away from this level was significant. 4. The level is obvious. So moving down to our last level, we have this level at the very bottom where price dropped, hit and reversed from, so we draw in. Again, what traits and criteria does this level meet that makes it a good level of support? 1. It is a swing low. 2. There are rejections. 3. Drastic movement. 4. The level is obvious. 5. It is recently respected or formed in a recent time period, meaning in the current time period, it is still valid. Now you have all your key levels drawn in. So let's continue to next pair. So, another question we always get asked is, how do you know when to draw in lines or zones? And which one do you prefer? So, here is the pound dollar. As you can see along the top, we have this level of resistance. The topic that we're about to explain to you also helps solve another debate that most traders have, which is, what is the best way to draw your line? Through the candle closes or from the candle wicks? So, there are 3 ways to draw in your lines for this top level here. So the first way would be to draw in a single solid line, which works well when you be sure the line touches all reversal points. The second way would be to draw in multiple lines, which we draw in from candle closes. So you have this candle close here, one line. Candle close, another line. Candle close, another line. Candle close, another line. Now the problem with this technique is that your chart becomes messy, which would make you confused, and is also why we always want to keep our charts as clean as possible. So this brings us to our preferred method, which is drawing in zones like this. This way it contains most of the candle closes and wicks. Make sure you remember this. It makes no difference whether you draw lines or zones because both indicate areas of support and resistance, meaning we always wait for the price action to place a trade in the general area, not at a solid price, line or zone. So moving on down, we spot this level here, we draw in a zone like this. And you are probably wondering why we did not take these candles to our zone. So here is a pro tip: do not draw in a large zone that can get you confused. Draw in smaller zones that contain most of the touches and points. Because let's say you would have drawn this massive zone here to cover this low here. 1. It looks terrible. 2. With such a wide area, you'll end up confused. As it gets worse, as you use more time frames. So instead, we decided to draw in a smaller zone like this, which touches most of the candle bodies, wicks, and points. And this point here considered a fake breakout. That we will cover this topic in the next episodes in detail. So next to the bottom, we have this swing low and we draw on a line. So as you can see, you have a nice